All right, let's get started. And I think as people come in and they join in, we can take the conversation there. But look, basically a lot of things Australia is actually doing well. It's very weird for me to say this, that I'm actually proud of what ScoMo is doing. Very happy with how he's tackled the issue of the virus. And I think we can see that in the numbers that are coming through. We're dealing with it a lot better than a lot of other countries. And I feel like right now is the time to continue that commitment to COVID-19 and the measures they've put in place. Because I think the quicker we can get through this, the more beneficial we will be, not only just, everyday life and lifestyle, but as an economy as a whole. It's almost a competitive advantage if your economy is actually operating versus an economy that isn't. And it's weird to say that, and I'm not being insensitive, but at the end of the day, that's the market we're in. That if Australia actually in 3 to 6 months recovers and businesses can open up again, we're going to be in a position where the UK, parts of Europe, and the US are going to be in a phase where we were probably, we didn't experience it that badly, but they're going to be a few months behind us. And what that will mean is that you're going to have a point where our economy is generating economic activity, and it means that we're earning more income. And that means that the Australian dollar will increase its power as the governments around the world will keep pumping stimulus into their own economies because they're in lockdown. So we can take major advantage of it, as weird as it is, but ScoMo's doing well. I'm very happy that he's actually doing something. He's gone from a villain during the bushfires to now being an absolute hero, which is interesting. But look, some countries are actually not feeling the effects of the lockdown yet. I think Australia hasn't felt it yet. Yes, cafes are closed. Yes, businesses are not operating, but we actually haven't had the effects of the economy kick in. Or the lockdown, I should say. So how it works is everything's on a lag effect, right? So if something happens today in the economy, it takes time before that gets realized. It's like when you start working out, yes, you'll see immediate sort of, oh, okay, I look great, I'm on a pump. But then it takes solid, consistent work to get to a point where you can start noticing those changes, long term, and they're sustainable, right? Whereas with the economy, it's the same thing. So stimulus that gets passed, we only have the legislation passed, right? Then after that, it takes time for it to get into the system. It takes time for those things to take effect. And we haven't seen that yet. We haven't even seen the start of it. So right now, the numbers that'll come out, they're going to be volatile. They're going to mean not much, to be honest. We're going to have, lower economic activity numbers. Forecasts are pretty much useless now. But we are in a position where it's very unknown as to what's going to happen. We haven't seen the full extent of this yet. So with countries that are going to go into lockdown or another stage of lockdown later on, they will feel the effects even further out from where we are, okay, if that makes sense. So I guess it's a perfect transition into what's happening in China. So with China, Wuhan actually released, their lockdown, or, they calmed down their lockdowns, however you want to call it, but they're getting back into some sort of normality in their lifestyle. So they're allowed to walk around and, communicate with people. It's different, right? So they're at the phase where they're actually now recovering. Now it's interesting. There's a lot of conspiracy theories going around about how, did they start this and it was all a scam, the corona scam, as some people are calling it? Possibly. But your job, as well as mine, is not to actually try and figure out if this is a massive conspiracy and whatnot. Our job is to actually understand what the effects of that is and how it affects you personally, to now be able to put yourself in a position where you're able to grow financially from it and take advantage of it. That's all. We're not here to try and feed conspiracy theories and think, oh, what if this happens? No. We need to know what we know, and we need to take advantage of the information. So what I'm saying is, if you're listening to these things and you go back and you check out our market updates, I want you to actually start acting on those things. So if I'm talking about a concept you don't know, either you can message me or you can Google it, right? You need to start educating yourself. It's not necessarily about, I need to contact Ravi because I want to purchase a property. It's, I want to contact him because I want to get to understanding what a modern monetary theory is. I want to know, what does this fiscal stimulus actually do to the economy? I know it's not everyone's cup of tea. I try and sort of dumb it down, or make it simplified so that everyone can understand. It's more fun for me when people understand anyway. So if there is any concepts that I talk about in these live videos or in my videos on YouTube, then just hit me up, okay? But with China now coming out from complete lockdown and recovery phase, they're gonna hope that the numbers don't start inflating and we're back to square one, because they're gonna have to go immediately into lockdown. So they're gonna slowly, progressively, see how this goes. And the same thing will happen here. Now, say the numbers don't increase and Wuhan is back, that means China's back operating. Now, the thing is, if China's back operating, but then you've got all these companies in America that are still in lockdown and customers aren't coming through, well then, they can't effectively operate, right? So China's gonna then, dominate in terms of their recovery process. They're gonna have all the implementation, everything's gonna be back to normal, whereas other countries are still gonna be feeling the effects of the lockdown. And that's when when China can buy up a lot of these cheap assets, like in the share market. They can take advantage of, people's level of fear and panic. And this is what I'm saying that you can take advantage of. You understand that people are scared. You're probably scared, right? And for good reason. I mean, we've never seen anything like this, and everyone keeps going, unprecedented. And there's lives and all this bullshit, right? Like the Queen giving a speech, an announcement of some crap, right? The thing is that you need to educate yourself so you're not scared. And the fact that you're here makes a big difference. And it means that you are now setting yourself up to actually make a move a lot quicker than those that aren't listening to these things and actively taking initiative to learn different things, right? So I'm really urging you guys to get ahead of it. The unsophisticated investor is a concept that most people don't understand. The unsophisticated investor is basically someone who buys into the hype and needs confirmation, whether that be through media outlets or actual markets going up, to actually want to buy. So for instance, when you're looking at property at the moment, some places, in some suburbs, the prices of property are, sort of tapering off, they're slowing down. People don't invest in those markets. The truth is they're a declining market and they're going to find the bottom. Whether they've found the bottom already, we don't know. But chances are you're going to have more of a chance to buy in a market that is going up, because that gives you confirmation. That's confirmation bias, that you're thinking, okay, well, it's rising, it's going to continue rising. And it's the unsophisticated investor that does that, and they try and time the market. The truth is, if the assets are cheap now, you are going to benefit from that in 10 to 20 years. So right now is a good time to actually get your finances in order. You may not want to actually buy because you're a bit scared. That's okay. You may want to actually just go, hey, can I borrow? Can I talk to the mortgage broker and have a conversation about what actually my car loan will mean for my borrowing capacity? Get yourself situated in a place where you can act when you're comfortable, right? Don't now think, oh, well, the virus is going to be around for a while. I don't know what I'm going to do. I'm just not going to do anything. In 6 months' time, when this virus is gone, or in 12 months' time, when we look back at this moment where you were scared, you're going to look back and regret the fact that you didn't have a chat with a broker. You didn't have a chat with Ravi to know what was happening in the market. And now you're going to go, oh, now I need to act. But it will be too late because you've missed 20% of that market going up. And that's where a lot of people will make their money. So someone that you guys may know, his name is Robert Kiyosaki. He wrote Rich Dad, Poor Dad. Everyone knows it's the all-time best-selling finance book. In that video, in that book, he really talks about a few concepts that resonate to us today, but even more so, a line or something that he really believes in is if you have money, you need to spend it. You need to spend it on productive debt. You need to get out of this mentality. It's a loser mentality if you think the money you have is something you need to save. Right now, this is like a perfect example of why you shouldn't be in a mentality where I need to save money. You need to get out of the mindset that I have $80,000 in my bank account. Like, you need to get out of that mindset that that looks great, because $80,000 is going to mean nothing if the supply of money that comes through is actually a lot more, and it means that your value of $80,000 is actually just tanking, right? So you would have been better investing in a property that maybe fell another $5,000, because the truth is the amount that your money can buy, it's the buying power of money, the amount you can buy tomorrow will be a lot less than today. That's just a fact, because you have all this government stimulus coming in. Now, the only advantage I see with there's a few advantages, but the major advantage I see with, ScoMo and how he's acted and Australia being in a good position is that if China actually recovers well, about 40% of our economy with exports and imports is based on China. Now, do the maths. If China goes well, we go well. It's why we didn't really feel the effects of the GFC. It didn't really affect us because our economies, they're linked with the global economy, but 40% of it is with China. They didn't feel anything, right? So if they actually start churning out their economic activity and economic numbers, we're in a position where we could actually flow on from that and actually recover quite quickly in terms of our economy. So we're going to have a conversation, and I don't doubt it, by the end of the year, we will be past COVID-19, and we're going to have conversations where the fundamentals of property in Australia, in pockets of Australia and certain states and suburbs, are actually primed for capital growth. The health concern is what stopped it. It wasn't an economic thing that drove for us to be in a position we're in. We're actually primed for an upswing and a boom market that most of you would know and refer to. If we are in that market and that's where we're going to be heading, everything's on pause, right? So once we come off pause, it's like literally going your foot off the brake pedal, and now we're going to go. When we go, we're going to go very quickly. And that's why I'm really urging, why I'm putting so much content out. And I'm having these conversations on the phone. I'm having 3 or 4 people every single day that I'm trying to educate or trying to talk to that need to take benefit of this. Right now, time is of the essence. Most people are scared, thinking that, well, no one else is going to do anything. Why should I? Fair enough. But I didn't get to where I was thinking with that mentality. And I urge you not to have the same mentality. Yes, you're going to have a process for how you come up with digesting information. But take your time, be certain to a certain extent, because you're never going to have a complete 100% certainty about anything in life. And especially when you're doing something you've never done before, it's going to be difficult. So I really urge you to sort of get educated, start filling in those pockets of unknown and with knowledge and learning, because that's going to set you up quite well. Now, the other thing I wanted to talk to you about was interesting. Airbnb declared illegal in New South Wales. So, guys, this has a few meanings. The one that I really want to draw upon is that if now New South Wales has declared that Airbnbs are illegal, the reason for that is fairly simple. It's not essential to be traveling. So why would you be staying in an Airbnb? So now Airbnbs, for at least the foreseeable future, are illegal. That means 120,000. Let's just get that number right. 120,000 properties in New South Wales will come back onto the market. What that will do is now, if you have ever thought of ever living near the beach, Bondi Beach, you want to rent a place, we're about to get into a really freaky time where the rents in all these coastal areas, in popular touristy areas, are actually going to fall through the ground for at least the next 6 months. Because now all those properties that people own that are sitting there as an Airbnb, now those Airbnbs are illegal. So they're going to come back onto the market and they're going to go, you know what? Please find a tenant that's going to stay in here for 6 months while the economy pauses, and then Airbnb will come back in. So it means for the next 6 months, if you've ever thought about taking, advantage of living closer to the city or near the beach or with your partner, now is the best time, because the rentals will drop. And this in lies what I've always been saying. You buy in Sydney, and if you have a property in Sydney and it's not tenanted out, or your tenancy is about to end, you are completely fucked, right? I'm not kidding. I'm not someone who swears a lot, but I'm so passionate about this that if you have a property, I'm not trying to scare you. I'm trying to give you the reality, is you're setting yourself up into a disaster. You're not going to have a tenant. That's purely it. And if you want a tenant in there, you're going to have to drop rates by hundreds of dollars. I'm not even talking about $20, $30. I'm talking about hundreds. You're going to see some properties come onto the market now. They're going to flood onto the market. They're not just going to come easily in. There's going to be too much supply for people. What that's going to do is it drives down rents. It doesn't really affect property prices unless they want to sell. Now, you may have some of these guys that have sat in properties, like an older couple. They may have bought a property in, say, Bondi Beach. They're like, oh, Airbnb makes us some good money, but now Airbnb's out, we're going to sell it. So there may be some sale activity, but I don't think so. I think this is a big play for the rental market, and vacancy rates are going to go through the roof. We've seen that the rental market vacancy rates in Sydney have, some say it's been decreasing. I think it's been increasing. We have so much supply, but we will be in a position of undersupply in the next 2 years. This is very important to know, that if we are in a position of undersupply, guys, it's basic law of economics, supply and demand. If there's too much demand, it drives prices up. If there's too much supply, it drives prices down. In this period, as well as the last 2 years, we actually haven't had too many building construction approvals. There was obviously a lot of issues with APRA coming in, and now COVID-19. So when certain things get said, you need to understand the bigger picture. When ScoMo announced last week that, construction workers, they can work 7 days a week. Some of you guys may not even know this. So they said, hey, 7 days a week, you can operate. You can build houses, do whatever you like. Just today, another 6 big projects related to construction got approved. What they are trying to do is they're going to use construction as a loophole to this social distancing law, or whatever it is called, and they're going to try and use that to escalate this economic activity. So from one hand, they're going to go, you know what, let's build houses, let's build units, and then on this front, we're going to pump in stimulus. So then when the stimulus comes in and there's construction happening, you're generating economic activity here, and you're going to generate economic activity here because people are going to spend it. So when the virus goes away in 6 to 9 months, when it sort of dies down, everyone's sort of more comfortable and confident to go out, then we're going to have this burst of economic activity come through, and that's when you're going to see prices go up. You're going to see inflation finally start kicking in. But the problem with how inflation works and what they're trying to do with pumping money in and printing it is you can't control the other side. So let's say, for instance, you've got a blocked pipe, right? So a blocked pipe, and you pump, acid, or you pump, water through it, it just doesn't get through, right? So it's just like pump, 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 right? That looks definitely wrong. But you get my point, is you're pumping in all this stimulus, you're pumping in all these activities, monetary, and you also got fiscal. All of this gets pumped in. Now, normally, if you were thinking in an ideal world, what it does is that it's going to slowly trickle through. It doesn't work like that, because now there's a blockage in the system, right? And you're pumping money through it, you're pumping everything through it, and then eventually the whole thing's going to collapse. When it collapses, you think this water that's been pumping all the way through against this one wall, do you think it's going to go slowly? Or do you think it's going to blast through? It's going to blast through, right? Answer's there. And when it blasts through is when you get into a period of inflation, and then we're going to see hyperinflation. And it brings me to the point that if you don't have assets, your money is going to be useless. Your money will mean shit all in the next 2 to 3 years. And so you're thinking, well, in the next 2 to 3 years, maybe I'll just buy something in 2 years. Well, you can take advantage now, buy something now, which means in 2 years' time, you can buy 2 more instead of 1. So instead of sitting on 1 property now, you can be sitting on 3 in 2 years' time. That's what I'm saying. And 1 property, I can tell you now, is not gonna do shit. In order to take real advantage of this, you're gonna have to start accumulating debt, productive debt, very quickly. And, you know, I had a conversation earlier with a prospective client where I spoke about rates not going up for the next 10 years. It's not gonna go up. The only situation in which interest rates will go up is one situation, and that situation is called hyperinflation. And when hyperinflation happens, you've got 2 things. One, you're hoping interest rates don't go up, which means your cash flow position, amazing. Or hyperinflation is gonna happen. If hyperinflation happens, right, your asset prices are gonna go through the roof, your debt's gonna stay down here, so you don't really care if interest rates at that point go up, because they have to control this, right? So you don't care if it goes up, because all you're gonna do is go, oh, well, you know what? I've got so much equity in there now, or my price for the properties have gone up so much, I'll just sell. So you sell one, pay down the debt on the entire portfolio, then who cares if your interest rates are up? But if you start at the time that these things start getting confirmed, and I think in 9 to 12 months, we're gonna be in a position where a lot of the stuff that I'm talking about, a lot of other idiots are gonna start talking about, a lot of media, journalist idiots are gonna start talking about, and they're gonna go, I kid you not, they're gonna flip from going, markets are gonna drop by 20%, and I can kid you not, a week later, they will say, FOMO has kicked in, the markets are recovering, and they're not gonna know any reason why. They just got told that it will. And you'll know, you can reflect back on these videos, and I'm looking forward to come December or come November of this year, when I sit there and I'm gonna literally take these clips, right, from YouTube. I'm gonna take them and then I'm gonna show people. And it's exactly what's gonna happen. It's basic economics. And I say this like, yes, we all care about, you know, projecting and, you know, forecasting of what's gonna happen and predicting. I don't think it's a prediction. I think I've done my numbers. There's a lot of smart people out there that, you know, follow someone like Robert Kiyosaki, you know, the rich dad, poor dad guy, is probably what you know him for. Follow his work. Follow what he's saying. He's literally saying to you that don't make the mistake of not buying. If you're gonna save during this time when money is given to you for free, you're an idiot. Like, there's nothing to it. It's just plain simple. So I don't really know what else to tell you guys. There is stock markets, I think, went up today. I know I talk about it every week, so I thought I'd mention it. Yeah, stocks went up. I still wouldn't touch them. These are very much volatile times. You've got in one country, the US, which pretty much determines what happens on the stock market. You've got them having the highest death rates in New York, but the markets went up in Australia by 2 to 3%. It's a load of shit. There's a lot of manipulation going on in the background. I say stay educated, stay safe, wash your hands, but get educated. Now is the perfect time. If you want to hop onto a call, I'm kidding, not kidding you. DM me straight after this. I'm going to lock it in. We're going to have a Zoom or Skype conversation, and you're going to understand exactly where you can actively participate in securing your financial wealth, and why right now is such a good time. Is why I'm talking more and more about it, because I know I'm going to have all these pieces of content that I can show in 6, 12, 9 months, whatever it is. And yeah, I don't know what else to tell you. Guys, thank you so much again for joining me. Again, as always, there's videos up on my YouTube channel, so search Property TV. Do check it out. There's videos from every market update I've ever done, and today actually marks 1 month for Search Property. So it's been an amazing ride so far. Thank you so much for all the support. If this is something that you like in terms of content, you're getting some value out of it, then please do share it. Search Property TV is the YouTube channel. I'll catch you guys next week. In the meantime, stay safe and keep doing what you do. So guys, that's another market update. I guess, less about numbers, a bit more about concepts and thought processes. Really getting yourself educated now. That's the key. My key message right now is things are looking promising. If you really look ahead into what 3, 6, 12 months looks like, we're heading into a market where things will recover. When they recover, I can guarantee you we're going to return to the same fundamentals of growth in the real estate market, in all markets really. We were placed quite well. So that's going to return. And when it does, it's going to be too late. You really want to start building that stuff up, the foundations of your property portfolios now. It's the best time it's ever been. If I had the borrowing capacity, if I had the ability to start all over again and I was able to start now, I'd be buying tonight. Let's put it that way. Look, everyone's different. Everyone's got a different risk profile. Give me a call. Let's jump on a Skype session. I really want to bring you some value. Whether you choose to go ahead with my buyer's agency services or not, it's not really my concern. My concern is to try and get you educated, get you in the best position possible so that we can help alleviate some of those questions and mental health concerns you may have. So guys, as always, thank you. It means a lot that if you've stayed all the way through, then you're definitely taking this seriously. I urge you to take another step forward, start taking some action, subscribe if you haven't already, and share this video with someone that thinks they know what's happening in the market, because I don't think they do. I'll catch you guys in the next one. Thanks.